It's 2025. It's easier to make money right now trading than it's ever been. And if you're still not making money consistently as a trader, I'm going to cover exactly what's holding you back in this video. It's called the 9 trading demons. And one of these demons, or several, is exactly what's holding you back from becoming a profitable trader. I guarantee you. Let's go ahead and get into it. I'm going to name the 9 trading demons. And if any of these sound familiar, this is exactly why you're not making money as a trader. And it can be multiple. First, you take poor risk reward trades. You enter trades too soon. You enter trades too late. You exit your trades too soon. You exit your trades too late. You take a trade that's not in your trading plan. You put your stop loss at the wrong place. You take a wrong position size. And you didn't take a trade according to your plan. I guarantee you, these are the 9 trading demons. And if you're not making money, it's because of one of these reasons. And I'm going to break down exactly why they're so detrimental and a very simple solution to the problem so that it no longer hurts you. You have to understand, guys, trading psychology, a lot of trading psychology stems right from your trading structure, your trading plan, your strategy. That is before the psychology. When you're going into your journey of becoming a trader, the first thing that every single trader goes on a hunt for is what strategy or system they're going to use. And most traders are looking for that holy grail that's going to make them rich. Sound familiar, right? You're looking for that perfect strategy that's going to make you rich, that works every single time. That's going to let you know exactly when to get into a trade, exactly when the market's going to turn around, exactly when it's going to go up. No retracement, no pullbacks, nothing. Goes straight to TP. That's what we look for, and then we realize either very quickly or it takes a long time that is not a thing. Trading is a game of probability. Now, the thing about probability is, in order for probability to work, you have to do the same exact thing over and over and over. And over time, you see how often it works and how often it doesn't. Here's the thing. Every time you do something different, now you're dealing with a different set of variables. I'm going to give you a very simple example. If I'm trying to make chicken Alfredo and I change my chicken for shrimp, I'm no longer eating chicken Alfredo. Now, this is shrimp Alfredo. This is a totally different meal. So every time you swap something different, something little in your trading, instead of using a moving average, you know what? I'm going to use a Fibonacci today. You just switched your entire strategy up, and now you're dealing with a whole different set of probability. Now, let me help you understand something about probability before we go into the trading demons. With probability, you never know what order wins and losses will come in. And you have to accept that as a trader. When you're dealing with a strategy, even if it's 70% accurate, in a sample size of 100, you're guaranteed 30 losses. You do not know what order these losses can come in. It can come 10 losses back to back before the wins come. That doesn't mean the strategy doesn't work. That just means that's the probability in the sequence that you were dealt. And you have to be able to deal with that. And all of these things are contained in your trading plan. Knowing your probability helps you create your trading plan. When you understand your strategy in totality and you follow a set of rules consistently, and you understand the probability of your trade working, you understand the ins and outs of your strategy, now you create a system that works with your strategy, meaning the time frames you trade, how much you risk per trade, how often you trade, what time you trade, what pairs you trade. All these different things are additional factors. The risk reward you decide to go on, all these things are based on your strategy. So if you have a solid strategy that actually works and you build a good system around this said strategy, psychology will be the easiest thing to deal with. But let's go ahead and break down these things. So first and foremost, I want you to understand, before psychology is your problem, your strategy might be the problem, or the lack of strategy may be your problem. You have to have a consistent step-by-step process you're doing every single day, and that is how you consistently make money as a trader. Now, let's say you have that. You have your strategy. You know exactly what you should be doing on a day-to-day basis. Let's go ahead and break down what is now in your path. What's stopping you from being profitable? Because just because you have a good strategy, I can have a great strategy and round up $1 million from it and give it to my best friend, and he can go broke using the same strategy because he lacks structure when it comes to following his psychological and structure rules when it comes to his trading plan. Let's go ahead and break this down. So you have a strategy, you have a routine that you follow every single day, meaning you know exactly what rules are in place of when to take a trade. So you have a step-by-step checklist, just like a recipe. You know exactly what time you trade. You know what session you trade. You know what pairs you trade. You know how much you're risking per trade. You know how much you're trying to make per trade. You know what your risk to reward factors are already going to be. All these already preset in place. So now that you have all these in place, let's get into it. So, demon number one, poor risk to reward trade. I want you guys to just think about probability again. And the reason why risk to reward, a bad risk to reward trade is never smart. And of course, if you have a high accuracy, you can pull this off, but most people don't have high accuracies, and even having a high accuracy takes an incredible discipline. Most people don't have high accuracy. So you have to keep in mind that I want big wins and small losses. In your trading, only 4 things should ever happen to you: a small loss, a small win, a break even, and a big win. These are the only 4 things you should ever let happen to your trading account. If you're gonna blow your account, you need to blow it slowly. It needs to crawl and bleed, like leak. You never wanna have your account just drop. It needs to leak. But when it comes to your wins, you want big equity curves. So a good risk reward ratio is important. I wanna help you guys understand, truly understand why. If you go online and you type in risk reward calculator, you're gonna see this calculator that breaks down the accuracy you need in order to be profitable depending on the risk reward you trade with. Did you know that if you were to risk a 1 to 3 risk reward on every single trade, you only need to be profitable 25% of the time in order to break even? I'm gonna break down. Let's say I risked $100 every trade, and if I win, I make $300. I lose the first trade, I'm down 100. I lose the second trade, I'm down 200. I lose the third trade, I'm down 300. And I win the last trade, and I made 300 off the winner. So now I broke even, and I only won 1 out of 4 times. That's 25%. So if you are profitable 26% of the time, you're in profit. 26 and above is profit. 30%, 40%, 50% accuracy is profit. So I can lose every other trade. I can lose 1 out of every 3 trades and still make money if I'm risking a 1 to 3 risk reward for every trade. So this is why understanding a smart risk to reward is more important and is better than trading accuracy. You don't have to be the smartest trader. You just need to make sure you're making a good amount of money when you're right and losing a small amount of money when you're wrong. That is important. Number 2, entering too soon. Now, entering too soon is usually a problem of impatience. It's a problem of impatience. And a lot of times trading will expose who you are as a person. If you enter your trades too soon, you're probably very impatient. You're probably really excited, trying to make some money, and I understand. You need to change your goal. Your goal is not to make money. And I know this sounds a little weird, but your goal every day when you wake up to come trade is not to make money. Your goal every day when you wake up to trade is to follow your system. You just want perfect execution. So if your rules say, wait till candle closure, wait till candle closure. Reason being, I know you're excited to go into the trade and you don't want to miss that perfect entry that you could possibly get. Because of course you may see the market right here and you want to enter right here, and by the time it closes it's up here. It's like, yo, my stop loss went from 20 pips to 40 pips. Bro, trust me, I feel you. I feel you. But you have to keep in mind, do you know how pin bars are formed? Pin bars are formed when the market pushes up one way and before the candle closes, comes right back down. You don't want to get caught in that. Don't want to get caught in that. You have to realize you created a strategy for a reason. This is why when you have a good strategy and you tested it and you see that it works, it gives you the confidence to follow it. And when you do anything outside of your strategy, you're just winging it at that point because you don't know you didn't test that. If you tested, let's say you tested, what if I entered my trades early? How profitable would I be? You're gonna see that it doesn't work. That's why you wait for candle closure. That's why you built your strategy. So anytime you don't do it, you're just going outside and you're putting yourself in a very vulnerable position. So you have to wait for candle closure. Entering too late is just as bad as entering too early. And the reason, and I feel like a lot of the times the reason why psychological problems are really strong in a lot of traders' lives is because they don't understand why it's so bad. Like, I see that you're thinking of why it's good, but you're not considering why this is a bad decision. When I enter a trade late, I understand the thought process of I don't want to miss out on this banger. I don't want to miss out on this banger. But you're not putting in consideration that the market can still turn around and it can still be lost, right? So let's just do a little comparison. If I enter a trade late, what are the pros? The pros of entering a trade late is I can still catch the move. Cool. What are the cons? Well, the cons of entering a trade late is, number one, you get a horrible risk to reward. I want you guys to really put it in perspective. When you're looking at a 1 to 3 risk to reward, especially the lower the time frame you go, and you know a lot of you traders like to trade on the lower time frames. The lower the time frame you go, if you're looking for a 1 to 3 risk to reward, a few pips can turn a 1 to 3 to a 1 to 2, to 1 to 2.5, to a 1 to 1.7. Like, entering a trade late messes up your risk to reward. Entering a trade late forces you to lower your lot size. And if you use the same lot size that you already would have used, if I wanted to use 20 lots and the market pushed up and I still use my 20 lots, guess what? Now I'm risking more because before your stop loss was 10 pips, now your stop loss is 20 pips. So now if I enter late and I risk the same amount, same lot size, I'm risking more money. I have a worse risk to reward. I can still lose the trade. Just because I enter late does not mean the trade is guaranteed to hit. I can still lose the trade. And I'm already feeling anxiety because I entered late and I know I entered late. You see, there's only one pro. You might catch the move. And there's like 4 or 5, and I can keep going. Cons to entering a trade late. So what do you do? What's the solution? Pending orders. Yo, this solved everything. I used to enter trades late because I knew my trade was a banger and I didn't want to miss out on it. The market rarely ever moves in a straight line. It rarely ever does, unless there's like news or something. 90% of the time, the market pulls back, goes, it dances. So, even if you see your trade late, put a pending order. Put a buy limit or a sell limit. If I want to sell right here, if this is where my strategy told me to get in, and I didn't see the market till I got here, I'm just gonna put a buy limit right here. So when the market pulls back, I can still get in at the same price I always wanted, and I could walk away, go to the gym, and I'll still get tagged into my price. Sometimes it won't get me, which is I'm just gonna live with, and sometimes it's gonna get me. And when I do it like that, I'm able to put myself in a great position. Makes sense. Number 4, exiting too soon. Now, exiting too soon is a fear thing, but again, you have to go back to the risk to reward. If you understand the importance of risk to reward, you will understand why you do not want to exit too soon. There's this notion of when you see green, take it. All blue is good, right? See green, I forgot all the different terms they used to say. Oh yeah, once it's blue, it's on you. That's the dumbest thing I ever heard in my life. Risk to reward is more important than accuracy. Big wins are more important than winning all the time. So, no. Why would you be okay with losing $100, but not have the patience to wait to make $100 at least? Like, you know what I'm saying? Like, traders will literally lose $100, and once they see $20 in profit, take it. How does that make sense? It makes no sense. Just think about the things that we do. It makes no sense. And the solution to this is walk away. Yo, set alerts. This is what you want to do. If you have a real problem with like interfering with your trades, when you get into your trade, set alerts. Because I understand, set and forget, you have to come back because you still want to manage your trade. So you have to be a little smart. So if I enter and I know I'm risking 20 pips, I already know I'm going to go break even at 20 pips. So I enter my trade, I put an alert at 20 pips, and I put an alert at my stop loss. So I walk away, and once I get a beep, I know either I hit stop loss or I should go break even. So I just look, okay, I go break even or stop loss down. Move on. You understand? And that helps you emotionally because you're not so attached to the candles moving. Think about it, bro. It's not the stop loss that hurts because you knew what you was risking. Even when you hit stop loss, it don't hurt as much as when the market was dancing on you. The dance of the market is more emotional turmoil than hit stop loss. So stop staring at the market all day. It's only messing your brain up, bro. Exiting too late. Stop being so greedy. Stop being so greedy. And the thing is, again, if you trust your plan, you will follow it. So the reason why you're holding on to that one winner is because you finally made a win, bro. You've been losing so much, you finally made a win. You're trying to sap every dollar out of it. It's not going to work like that, bro. So you have to, and then another thing is you cannot optimize for the best events. A lot of traders do that. When they're backtesting their strategy, they see there's certain times that they get 1 to 10s, but most of the time they get 1 to 2s or 1 to 3s. So they build a strategy to be able to attempt to get that 1 to 10, and it doesn't really happen that often. So what you want to do is build a strategy for your 1 to 2 and a 1 to 3. And then what you can do is in your strategy, you can create a partial system where you take most at 1 to 2s and 1 to 3s, and then you hold a little bit for that 1 to 10. And if you end up getting a 1 to 10, it's going to be a big win, regardless if you put a small lot or a big lot. But at least, you know, you can still be able to get paid consistently, right? And gather those wins. Trade not in trading plan. This is the biggest thing in the world. Again, family, probability. Remember, every time you take a trade in your trading plan, it's just like if you went to the restaurant and you said, I want chicken Alfredo, and they put shrimp instead of chicken. It's not chicken Alfredo. I said I want shrimp Alfredo. This is not what I ordered. Every time you take a trade that's out of your trading plan, you're not getting what you ordered. Are you gonna go for that? If you went to a restaurant and they got you shrimp and you allergic to shrimp and you said I want chicken and they gave you shrimp, you're not going for that, bro. So stop taking trades that's not in your plan, because this is not what you ordered. You ordered a win, you're gonna get a loss. Did you notice that every single time you take a trade outside your trading plan, you lose every single time? Like every single time. Every single time you take a trade outside your trading plan, you lose or hit break even. It never works out. It only works out 1 out of 10 times, but you still do it every day. It makes absolutely no sense. Trade in your trading plan. Why? Because you know it works. That's why you made it a plan. That's why you set a plan. Because you know it works. If you didn't know it worked, it wouldn't be a plan. So why would you follow your plan when you know it works? Okay. Incorrect stop loss placement. That's fear. And a lot of times I feel that one. You know, with incorrect stop loss placement, again, goes back to, do you trust your plan or not? And you have to be smart with stop losses, because with stop losses, the further back you put it, the less likely you are to get wicked out, the more likely you are to be right. The more space you give your stop losses, the more accuracy you're going to have, literally. However, that affects your risk to reward. So you're going to have to hold your trades longer in order to get the risk reward you may desire, or you just may have to settle for less risk rewards. And that's the decision you're going to have to live with as a trader. And again, no matter what decision you make, there's no perfect decision, right? If I go with tighter stop loss, I can get better risk rewards. I may lose a little more. I may get wicked out a little more and have to live with getting wicked out, seeing the market go and not being able to get in. Because if I was to try to chase it, now I'm taking a trade that's not in my plan. Again, not following my plan. So stop loss placement, this comes down to, do you trust your rules? Because when you back tested it, you back tested with a stop loss behind the candle, or a few pips behind the candle, or behind the low, or whatever your rule is. You tested that stop loss, and you've seen that stop loss holds true most of the time. You optimized it for your strategy. Why would you switch it up during game time? It makes no sense. It's literally like practicing something. I want you to understand what traders do every day. This is what we do. This is how dumb we are. We practice all day long. And once the market opens, we do the complete opposite. We don't follow the plan, not one bit. And then we lose. And then we come back when the trading day is over and we say, damn, man, if I followed my rules, I would have made a band today. But instead, I lost 2,000. And then we test and work so that tomorrow we are ready to go. And then tomorrow we wake up and we break our rules again. And we tell our friend that, hey, look, I got the secret sauce and I know exactly how we're going to get rich. And you're not lying. You know, you really know something that's great. You know how to run up 100,000, how to run up 1 million. You know how to get a funded account. You know how to pass. You know how to do everything you need to do to actually become successful as a trader. But you don't even follow your plan. And you work so hard to test it and get so great at identifying your plan, and you still break it tomorrow. and your friend don't believe you because you're not making no money. And you're like, yo, you don't listen, man. You don't get it. Watch this. Watch when I get my Lambo. And you didn't get a Lambo yet because you don't follow your rules. You can't go a week. You can't go a week following your rules every day. That's why you don't make money trading. Because you never went a good 24 hours following your rules. You never went a week, a month, doing the same thing every day. That's why you don't make money. Let's keep going. Wrong position size. Guys, especially if you got a funded account, it's not worth it. This is going to solve all your problems. Right? This is going to solve all your problems. If your problem is incorrect position sizing and you over leverage. I used to be an over leverage king. Me and my cousin, the person that put me on the trading, we used to pride ourselves. We used to call ourselves over leverage kings. We used to like flip accounts. I was like actually at a point in my early trading career, like my like marketing pitch, like, yo, I just turned 100 to 1,000. And no one knew that I blew that $100 10, 12 times before I finally flipped it to 1,000. Just to blow 1,000 after I posted it, trying to flip it to 5. And you know how many times that happened? And I know there's a lot of traders that be like, yo, I feel you, bro. Here's what you gotta understand with risk management. And when I understood this one principle, I never over leveraged again. And I never even had the urge to. You never know what's going to happen. You have to accept every single time you take a trade, you do not know what is going to happen. You simply don't know. You're dealing with probability. A strategy means over time, every time this pattern presents itself, it wins majority of the time or has a profitable edge. The thing about statistics is, the thing about probability is, you never know the sequence. You don't know the sequence of wins and losses. It's impossible. It's impossible for me to tell you, I guarantee you, the stock is going to go up. It's literally, no one can do it. It's impossible unless you illegally make it move. It's impossible. So let go of that. Have faith in your strategy, not the trade itself. And once you have faith in your strategy, over leverage on your strategy, meaning you consistently risk for your strategy. Not risk for one trade and risk for the others. Be consistent and aggressive with your strategy. Because you know what works. So if you're aggressively gonna get paid. But with your strategy, nothing else. And you have to be consistent every single time, because again, you do not know the sequence. So you have to give each trade an equal opportunity to play itself out. Don't judge a trade early based off its beginning. It can pull back in the beginning. That doesn't mean it's gonna turn around. You were a horrible person when you was a kid. You was bad and you turned your life around. What if because you was a bad kid, your parents kicked you to the curb? You would have never became a better person. So because your trade went a little bit in drawdown, now you want to kick it to the curb? That makes no sense. You are horrible. That's horrible that you were heartless. That don't even make no sense. And last but not least, you didn't take a trade that was in your plan. I'm going to tell you exactly why you did that. The only reason why you didn't take the trade that was in your plan is because you took 3-4 trades that was not in your plan. And now your heart hurts. Your brain hurts. You're psychologically drained. You're mentally drained. And I know it's the same thing, but it's different. You're just drained as a person. You done took 4 losses and 2 break-evens, breaking your rules. And now you've been waiting all day for a trade. You ain't getting nothing. You've been forcing it, trying to, because you woke up trying to get some money today. And I feel you, brother, sister. And now your trade finally popped up. And guess what? Guess what? You can only lose 4% of the day for your funded account. You're already down 3.5. So you can't take it. Or you're just so mentally drained that it's just like, sometimes when I'm mentally drained, I take trades and I go to sleep. I take the trade and I go to sleep. I don't want to see it. You know, so I feel you. But the only solution to that problem, if you're afraid of taking trades according to your plan, is stop breaking your rules. And if you don't break rules and you still don't take trades, that means you don't trust your plan. So that just goes back to the beginning. You have to trust your strategy. You don't know your strategy enough. You have to do more repetition and just go back test. I guarantee you, if any of these is your problem, your solution is back testing. If you go back testing, it will remind you how great your strategy really is. If it's great, it'll remind you why you need to follow it. And I promise you guys, if you are able to eliminate all of these 9 demons, you will be a profitable trader, guaranteed. So attached here, and this is to help you guys out, I put this in the description for you guys, is a PDF of the Demon Finder checklist. And this Demon Finder checklist will allow you to be able to keep track of your own trading. And every time you break one of these rules, I want you to check it off, check it off, check it off, check it off, check it off. And you'll be able to see which one is killing you the most. And the thing with each one of these Demon Finders is, with one of these being wrong, you're automatically can become unprofitable. Like just breaking one of these rules on a consistent basis will destroy your entire edge. So imagine if you're breaking 3, 4, 5, or all of them, right? So just check them off every time you break it. And once you fill a row out, you get to 10, stop trading, stop, take a break, review, back test, just reel it back in real quick. If you took all the principles that I broke down in this video, I guarantee you your trading is solved, right? As long as you have a profitable strategy with any decent edge, you follow these rules and you just get rid of just get yourself out the way. You're in the way of yourself. Get yourself out the way. I guarantee you're gonna do well. And for those that need to learn a strategy, that need to learn an edge, and that's your problem, it's not the psychology, or whether maybe the psychology is your problem and you need a mentor, need an accountability partner, or even a community of traders that are on that same journey as you to help you and hold you accountable. You can go ahead and shoot me a DM on Instagram at BTMacademy_, and that's BTMacademy_, on all platforms. YouTube is before the Million Trading Academy, as you guys know. TikTok is BTM Academy. Go ahead and shoot me a DM. You know what I'm saying? We're gonna get you right. We're gonna get you started. We have a phenomenal course waiting for you. That's gonna give you exactly everything you need to know from basics. We're gonna take it from basics, from not even knowing what trading even is. You don't even gotta know what the word trading even means. From the basics to intermediate, and bring you all the way to the advanced section of the course where you understand all the strategies and methods that I use on a daily basis. Be able to trade with me live, trade with the team, and join a community of like-minded individuals that's on that same journey as you. All right, man, go ahead and make that money as a trader. Get them demon finders out of your trading. Get them demons out so you can go ahead and be prosperous. We out here.